To win in Forex, we need to trade like robots. Otherwise, we sabotage our own success through petty mistakes when we become emotional. This strategy guarantees, however you feel, your trading will not be affected when you follow this plan. Every step is mechanical and can be seen on the chart, and all you need to do is sit on your hands and execute only when the strategy says so. If you are working and have no time to look at the charts to study and trade consistently, we are looking to work with you to help you achieve the consistency that you want. If this is you, check out the free course link in the description. It's less than 2 hours explaining this strategy and more. Alright, let's jump into it. Number 1 is the weekly cycle. So, what is the weekly cycle? The weekly cycle is simply Monday sets the high and the low of the week. So, if you are following along, Monday sets the high and the low of the week. Now, Tuesday can do 2 things. Tuesday can break out and close back inside of Monday's high and low, or it can close outside of Monday's high and low. So if it closes inside, so imagine Monday sets a box like that. So if Tuesday closing price is inside of this box, we have what we call a failed breakout. And a failed breakout, if it's at the low of the week, then the next day we have a signal to buy. And so far we have 3 days. We have Monday setting the high and the low of the week. We have Tuesday breaking out of the high and the low of the week, but closing back inside. So that tells us to buy on Wednesday. Now, say for example, Tuesday breaks out and closes outside of the low of the week. What we do is we just adjust this box to this level. And now, all you have to do is wait for price to come back to the low of the week and break out, and then close back inside to give us a failed breakout so that we can buy the next day. And it can also happen at the high of the week, where we have price on Tuesday or Wednesday or whatever day, so long as we know where the high and the low of the week is, breaks out and then closes back inside of the range. So let's assume this is on Thursday. This means that we have a failed breakout at the high of the week. So what do? On Friday, we start looking for sell. Simple. Also, think of this box as an area where we have value and traps. Now, the trap is inside the box, and the area of value is outside of the box, like that. And this will come in handy later. So think of this is an area where if you buy low, this is where you are exiting. Or if you sell high, this is where you are exiting. If you find yourself trading inside, know that you are bound to get trapped because market can move either way. That covers the weekly cycle. Now, moving on to the trading day. So, let's assume we have Monday setting that high and that low of the week. We have Tuesday breaking out and closing back inside of the range as a failed breakout. So, if we have a failed breakout like that, then we start to look for buys on Wednesday. So, on this Wednesday, what exactly are we looking for? So, if we are looking for buys, this is the new low of the week, because the low and the high of the week is described as the highest point price has reached that day and the lowest point price has reached that day. So we focus on this trading day. The trading day begins there. Now, on the trading day, we follow a specific process, which is we have time, we look for the high and the low of the day, we have the first hour, which we don't trade, and then we adjust accordingly. Then we look for the breakout and finally the reversal. So how does this process look like in real life? So we have time. Now for time, we don't trade any time. We have a specific timing window. Asia, our timing window is 8 to 11 p.m. New York time. And then for London, we have 2 to 5 a.m. New York time. And then for New York, we have 8 to 11 a.m. New York time. So this means that we can trade any session, but we already know the timing window. So say for example, we trade the London session. All we do is identify our timing window from 2 to 5. The second step is we know we are buying. So we want to know where the high and the low of the day is, because we don't want to trade inside. Remember the box. We want to trade outside of that box. So say for example, that is the high and that is the low of the day prior to the session. So when you're coming to the session, obviously there is no candles there. So we are just looking at what has happened, the history. Now, once we have the high and the low of the day and the timing window, the next step is we let the first hour close. Now, the first hour in Asia is 8 to 9, London is 2 to 3, and for New York is 8 to 9. So we are trading the London session, so we let the first hour close. Now, say for example, that is the low and that is the high. That is the high, that is the low, and we are looking to buy. The first hour can do two things. The first hour can consolidate inside of this high and this low. And the first hour can also pin the low or break out. So if it stays inside, then we don't adjust any high or low, because the high and the low of the day is intact. It's this area and it's this area. But if we pin or break out, then we have a new low of the day, and we adjust our line to show us the new low of the day. Now, once we have adjusted the high and the low of the day accordingly, then we wait for a breakout. And a breakout is just one candle breaking out like that. We are interested in a one candle breakout. So once we see the one candle breakout, then the next one, if it's a reversal candle after the breakout, then we have a reversal template. And this is exactly what we look for. Now, once everything is set on the 15-minute time frame, then we go to look for our entry on the 1-minute time frame. But before we look for our entry, let's look at a real life example of what we are talking about. So, say for example, so we will just look at a random example. So let's look at gold. Now, if we look at gold, Monday sets the high and the low of the week, like that. Tuesday breaks out and closes back inside of the range. So, as I told you, imagine Monday sets a box. So let's draw that box. So Monday gives us that box like that, up to Tuesday's low, up to Tuesday's close. We see the breakout and we see the close is inside of the box. Failed breakout at the high of the week tells us to sell on Wednesday. So on Wednesday is when we look for our setup at the high of the day. So let's look at an example of a trading day. So on Euro GBP we have the same scenario. Now on the trading day we want to start with the time. So we got this trade setup in the Asian session. So from 8 to 11, 20 to 23. Alright. Step number 2 is the high of the day and the low of the day prior to the session. So this is the high of the day prior to the session. Now assume all this information inside. And then we have the low of the day prior to the session. Step number 3 is we let the first hour close. Now the first hour begins at 8, ends at 9. So from 8 to 9, 20:45 to 9. That sets our new high of the day because we broke out. And then after that, we look for the breakout. So we have a breakout. So I forgot to mention one thing. We look for a 1, 2, 3 pattern after the breakout. Now, after the breakout, this is the 1, 2, 3 breakout. 1, 2, 3. End pattern. Now, this number 2 needs to be 2 or more consecutive candles. And this number 3 needs to be a clean move towards the breakout. Now, once we get the breakout and we get the reversal candle, then now we can go to the 1 minute time frame. So when we go to the 1 minute time frame to make sure everything is aligned. So we have the downtrend going, and then this is where we have our uptrend coming up. So the moment we break structure to the upside, then we start looking for an M pattern, which we broke structure to the downside here. And then we have our retest, and then we got the engulfment candle at 22.19. That is our entry. Stops at that level, and then we target the low of the day. Simple. Now our entry is there. Our exit is either the stop loss or the take profit. Meaning you don't have to worry about where to add in position or all that bullshit. This is the strategy that if you follow, you are guaranteed to make money regardless of how you feel.